Than expected retail earnings are once again show that the US consumer is in good shape. The numbers came from Lowe's and Target. Now, they both beat estimates and their shares soared, particularly Target, up 20%. The company's raising its full-year earnings outlook. Now, 20% is a hefty move for a mature retailer like Target. The big picture of retail earnings is once again very mixed. This shows how shares reacted in the 24 hours after earnings. Macy's was down, Walmart was up just a tad, Home Depot up a tad and a bit, Kohl's down. So Clare is here to explain what's the underlying. Why should some of those be down and Target be up? What did Target say that Walmart didn't?
Well, so, I mean, Target beat on all metrics, which is something that Walmart didn't. But I think what you're seeing with those numbers there, Richard, is more of what we saw in 2017, really, the bifurcation of the big box from the department stores. I wish I could tell you that it was something new, but the department stores...
What do you mean by that?
So the department stores are really struggling this year, Richard. Before I came on, I made a note of the year-to-date performances of some of them. Macy's down 48%, Nordstrom, which was seen as one of the big adapters, down 44%, and yet we have Target, most of which happened today, but up 54% on the year. Walmart is up 20%. I mean, I think...
Hang on. What, to a viewer who's not as familiar, and myself included, right, what is the difference between a department store and a big box store, since essentially they sell the same things?
Well, so the department stores are usually attached to malls. That is part of their problem. And they will have lots of different floors, lots of different brands, and all kinds of different products. And the big box stores tend to have lower prices. They tend to include grocery, which the department stores don't. And that is part of their strength. But I think Target, it's not just about what they are, it's about how they've executed over the past 2 years. They spent $7 billion, or they pledged it in 2017 to revamp their digital, to revamp their stores, and it's really starting to bear fruit. They saw digital sales up 34%. That's almost as good as Walmart, which is now starting to be seen as one of the leaders there. They saw their same-day shipping options really contribute a significant amount to their same-store sales. They've got pick-up, drive-up. They bought a company called Shipt in 2017 that does one-day shipping. So they're really starting to execute. And one thing that is interesting is they have already factored into the guidance that they raised this year the potential impact from tariffs. So they don't really expect that to be much of a problem this year. But they're not out of the woods, Richard. They said this could be a 2020 problem, and I think that's what we're looking at with retail when it comes to the tariffs.